Equities market and analysts expect half-year earnings data to dictate market direction, while investors are nudged to position in fundamentally sound stocks with attractive dividend yields. Olomofe Mathew, an analyst at EDC Securities, joins us now to discuss market dynamics following profit taken across the banking sector. Olomofe, thank you for joining us today.
Thank you for having me. Thank you.
As you know, it's earnings season. We've seen the likes of Presco, Bua Foods, Okomo Oil. We've seen a number of companies declaring profit. And on the flip side, we've seen, of course, some companies not doing exactly the same. We've seen some revaluation losses, talking about the FX losses. Talk to us about this and how this could, I'd like us to start with that. For these companies, the likes of MTN, Nestle, Dangote Sugar, Seplat, Nigerian breweries, what does that mean for them in terms of impact on their dividends going forward, dividend payment for this year, full year this year? And do you think that there might be a focus on retained earnings instead?
Thank you very much. So I think generally this era presents opportunities for banks, like you already mentioned. Amidst the unification of the naira, banks are able to show out impressive performance, particularly because of the valuation of their FX positions. And we've seen the likes of FBNH results, Wema Bank, Fidelity results getting impressive. But for consumer names, industrial names, and telcos, because of their huge exposure to FX, we've seen significant um, negative impact on their earnings. Just take for instance for Nestle, the major reason why we saw each loss before tax after tax was because of significant FX losses. And if you look across the counter for consumer names, that seems to be the story, as well as industrial names. So I think going forward, we don't think it's going to dissipate in the near term. This most likely will stay on in the near term in terms of how it's going to impact on performance. We are not really bullish that there's going to be a near-term recovery this year. I would think that that's really a story that they may have to cope with this year. And that's for consumer names and industrial names. So we still see pressure in the near term. So as regards dividends, like you already mentioned, take for instance a Nestle already have a negative equity position year to date, and that's because of the loss position they recorded in H1. And if you look at the story as a whole, it's pretty much what I've seen across the consumer space and the industrial space. And so we think that is really going to impact on earnings and extension dividends per share. We don't think there's going to be any better at all compared to what they've declared. For some companies like Nestle, because of historical, because of their history of paying dividends, they may want to take a
Okay.
deep out from their retained earnings in the past.
I wanted to draw your attention to Nigerian breweries. We're just looking at this story out today. The company, the brewing company, announcing a price increase on its most of its products. Of course, being a key player, a leading player in that sector, what does that mean, especially for consumers who obviously will have to pay higher for beer now? And we know that the consumer wallet is also shrinking at the same time. What does this mean for the company? Do you see them successfully passing on this price increase while also maintaining volumes?
I think it's quite impossible because you already mentioned consumer is quite subdued. And I think the price increases that is quite expected because cost pressures is pretty much. I mean, so most of these companies are exposed to FX, and so it means that they have to incur more in terms of production cost. But given the fact that they're in a space that it's also quite competitive. It's going to be very difficult for them to pass on price increase entirely to consumers, and so you expect to see some level of pressure in terms of margins, right? And so if you look at consumer results and industrial results, you probably see that there have been some level of pressure on their margin, and that shows that they are not able to.
All right, looks like we're going to have to leave it there with Olomofe. That was Olomofe Mathew, analyst at EDC Securities.